It's a view from the floor here at the New York Stock Exchange. I am joined by Kathleen Dumes, Senior Investment Strategist at Bernstein Private Wealth Management. It's great to see you, Kathleen. And Kathleen, there is a lot of uncertainty going on right now, geopolitical tensions, inflation. Has that changed Bernstein's outlook at all?
So, the recent inflation data has been a really good reminder that upside pressures persist and that those are likely to cause volatility for both markets and policy expectations. That said, one hotter inflation report does not necessarily change the broader investment case. We still see an economy that is slowing but relatively resilient, which means that this remains an environment that will reward discipline over reaction. Now, we get the question all the time, does this mean that the Fed stays higher for longer? It certainly means that the path forward is less than straightforward, and markets may have to recalibrate expectations around the pace of easing, but that's very different than saying that the broader growth outlook has materially deteriorated. Of course, that can change depending on how long the conflict in Iran persists and how long oil prices stay elevated.
So, with that being said, what would you say are some attractive opportunities right now?
So, we really want to focus on quality and selectivity. We favor companies that have strong balance sheets, durable margins, pricing power, particularly in sectors that can hold up through slower growth and through shifting rate expectations. We also see renewed opportunities in fixed income, where higher yields are allowing investors to generate really attractive levels of income without taking on excessive risk. And then I'd also say that if March or even the market's reaction on Tuesday give you flashbacks of 2022, that is exactly why we recommend an allocation to private alternatives because it still is one of the asset classes that offers some of the best risk adjusted returns relative to the broader market.
What would you say are some of the biggest risk factors for investors right now?
So I'd say it's not about a single headline, but really the interaction of multiple forces at once, including inflation, geopolitical uncertainty, slower growth. The combination of those can create a really fragile sentiment backdrop that can increase the temptation for investors to overreact. Now, from a portfolio perspective, some of the bigger risks are market concentration, liquidity mismatches, which we've seen a lot in the headlines around private credit. And I'd say making short term or tactical shifts based on short term volatility. You'd be surprised at how investor behavior during periods of uncertainty really creates a much bigger risk for markets.
Believe it or not, we still have a whole second half of the year. A lot already has happened in the markets. What is your outlook for the rest of the year?
So we expect the second half of the year to remain uneven, particularly as markets continue to navigate this uncertain environment, including the geopolitics, slower growth. However, our long-term outlook remains relatively constructive because historically markets have been resilient through inflation cycles, shifting policy expectations, and volatility. So our outlook for the near term is you want to remain tactically selective, but longer term, we still believe that well-balanced, diversified, high-quality portfolios are effectively positioned to be able to navigate this environment well.
Kathleen, thank you so much for the insight and joining us here.
Thank you for having us.
And that'll do it for us here at the New York Stock Exchange with a view from the floor. I'm Michelle Yu. We'll see you next time. Take care.